And whenever we've seen a reopening of some kind, we see very, good growth and good activity levels. And so we are sensing that in the footprints in which we operate. We serve nearly 26 million customers in North America, and we see that activity. So based on that, we feel, the provisions needed to come down, and that's what we did. And frankly, if you look at our coverages going forward, they're more than healthy. So I feel, based on what we are seeing in the economy, see the level of activity, that's an appropriate level to have. Now, your point, yes, there has been a lot of support. But in addition to that, there's a huge amount of pent-up demand. If you look at economic growth forecasts, if you look at activities, you would expect that the economy will be quite buoyant, and that should bode well for jobs and hence for the growth in the economy.
You have, as do the other banks, the other big banks, now a lot of capital on your books that you could deploy. What's your view of the best ways to do that? Be that upping your dividend, upping share buybacks, or as I think you've already referenced on your analyst call, making some acquisitions?
Well, we've had a capital deployment framework, for many years. We always want to make sure we have more than adequate capital to support our growth strategies, make sure that we have adequate capital to invest in our businesses, to support the economy, to support our customers. And on top of that, if we need capabilities that are important for the bank, for the long-term growth of the bank, we've said that we will use our capital either to build that capability organically or to acquire. And then, of course, TD has been, traditionally known to be conservative and building up capital levels. So should a compelling opportunity present itself because of, the various economic hardships that people have been through over the last year and a half, then, of course, we will look at those very seriously. As long as they make strategic sense, financial sense, risk appetite, cultural sense, we would, of course, look at it. But the good thing for the bank is that we are not compelled to do an acquisition because we are of scale in the markets in which we operate. Now, with respect to buybacks and dividends, we will see when restrictions are lifted. And if all those other needs for capital are no more applicable, then, of course, we will look at buybacks and dividends as well.
And I mean, on that front, you have, as the other banks have, seen your share price run up. And because of those restrictions on you, no change in dividend. So your yield has come down. Do you have a target yield that you try to stay at? I mean, can we kind of make some assumptions about the dividend based on where you want that yield to be?
No, we have a target payout ratio, Amanda. We've consistently had that for many years now. It's between 40 to 50%, call it around 45% payout ratio. And we don't target it precisely that, but generally that's what you should expect from the bank. And we've been quite consistent over the past few years. That's how we look at dividends. Because dividends are also a reflection of our view on earnings growth. And I think there should be a relationship between those two numbers.
As you say, there is some pent-up demand coming. We know that reopening will create big pops, certainly in particular sectors. As you look further than that, past the quarter or two after reopening, what do you think are the big risks to the overall economy, but therefore also to your business?
Well, I see actually, growth sustaining itself for more than 2 quarters, because if you look at the pent-up demand, if you look at the bank deposit business, we've seen our deposits go up, substantially in the last 1 year. As folks have been under some kind of a lockdown, they've not been able to spend money. There's a huge savings rate increase that has occurred. And my suspicion is that a lot of the deposit business we have is going to get spent. That's good for the economy. And so I see growth sustaining itself more than a couple of quarters, as you pointed out. Now, there are always risks. There's a chance we might overheat. If interest rates go up a bit, that might slow down the economy a bit. But those are normal cyclical factors that you look at. Hopefully, we don't have an event like all of us have just been through for the past 15 months or so. So after that, I see more sort of normal types of environment where, yes, there'll be some quarters that'll be very buoyant and some quarters that might be a little soft. But generally, I see an upward track here for the next little while.
So optimism at the moment, of course, you're benefiting from the low end of the curve at the short end as it rises on the long end. Good for the banks. We do know rates will likely go higher in the open market as well as for overnight lending rates. Bharat, what does that do to your thoughts about housing and mortgages and that piece of your business? Do you have concerns there, or do you expect just a natural slowdown as rates rise?
Well, you will. I mean, of course, interest rates do have an influence on mortgage demand and all that. But, fundamentally, in Canada at least, we've had a secular problem of supply. So there is a secular sort of gap here that needs to be filled. And so there'll be healthy demand for housing as the economy opens up, immigration is restored. And so I see a sustained level of demand there. Now, as to what happens to markets, markets have a lot of factors that come into play. Rates is a big factor. There could be, softness in the economy or a very, very strong economy. All those would play a role. But generally speaking, we at TD have always looked at a consistent way of underwriting these mortgages, feel very comfortable, with our book. And frankly, in the markets in which we operate, I see things, remaining pretty good for quite some time.
We had those the Senate Banking Committee hearings this week and U.S. senators grilling some of your counterparts south of the border about overdraft fees and some of the other fees that they charge consumers. You don't get the same grilling on this side, except maybe right here, Bharat. So let's go there, which is to say, as the economy reopens, I know the banks will be expected to be lending, which is one way you support consumers and small businesses. What else do you think you could do by way of lower fees, supporting Canadians, and really kind of playing a role, even if it eats into your margins a little bit, in economic growth?
I think, when you look at through the pandemic, I think banks generally, and I can talk about TD, the deferral programs that were put in place. We have a whole program in Canada called TD Helps, which is consistently provided support whenever our customers or require help in some financial, changing of financial conditions or interest rates or whatever the case might be. We just launched something called TD Ready Advice. Once again, this is a proactive program from the bank reaching out to our customers whom we feel may require, some help down the road. So our bank has been, traditionally well known for that. I mean, we are there for our customers. If there are customers who feel that, their accounts may not be appropriate for them, then let's have a discussion because, we certainly have lots of offerings. Let's make sure that you have the offering that suits you and it meets your needs. So, I think the bank is not looking at a specific program now. We've always had programs in place and they've worked remarkably well. Fees and all those things are looked at on a regular basis. We've not moved, since the pandemic started. Yes, there have been certain moves that have occurred. We constantly look at markets, look at our competitive position. And we have, I'll repeat myself, that, if customers feel that they don't get the value that they think they need, then please talk to us because we may have other offerings that may suit you better.
We just got the details of President Biden's proposed budget in the U.S. Not unlike the one that we've seen here, Bharat, we have governments that are spending an awful lot of money, despite the fact that, of course, the economies are reopening and there's a lot of predicted growth, to your point, and the other banks about your outlook and how positive you are. Do you worry about the fiscal sustainability of what our governments are doing, which could come back, obviously, for companies like yours that you pay a price for at some point?
Well, listen, when you're in the middle of the pandemic, it is important that we do whatever it takes, to get out of a major health crisis, tragic health crisis, I might add. And so I think it is appropriate at that time, and that's what governments do. They play that role. And I think it was important. It is important that governments, provide the support that is absolutely necessary. But at some point, hopefully we will normalize. My own view is that, things have started to open up and there is good growth potential in the economy. So at some point, this will start normalizing. But there are other major requirements. We can talk about climate change. What does that take? What role can governments play in that? Major infrastructure needs, that perhaps need to be looked at given what has gone on. So there are other aspects of the economy that I am sure requires more thought, more investment.